Hey everyone, it's that time again. March has finished, so we want to check out the stats, and it's an interesting one. We did a little bit more deep dive this time, so let's see what it's looking like. Hey everyone, Richard Payne here from Halifax Homes and Lifestyles at eXp Realty here in Halifax, Nova Scotia, and we're looking back at the month of March because it's been a little bit odd. You'll find out why when we go into a bit more detail and everything, but it's like a little bit strange. So it's one of those times, and let's get straight into the biggest number that everybody wants to know about, which of course is what is the average price of houses here in Halifax Regional Municipality for the month of March. Well, $579 and a little bit $1,000. Yeah, 579, 539. 539 is what it was last month, or 538. So when you look at that number, $579.8 thousand on average for all of the houses that are sold in HRM in March. Now, when we go back like 7 months, because roughly for the last 7 months, we've been kind of hovering around that $535,000 number. And it's kind of just been going like this. It's been pretty steady. Then all of a sudden we jump up 8% in this month. Now, let's go back and look at last year. Last year was $639,500. So we are down 9.4% on March of last year. But we also know that March, April, May was kind of the peak of everything we ever did. So it's really interesting to say, well, we're only 10% off that number. And we've been bouncing around the 530 something number for 7 months now. So the big thing is why? Why did we get such a good jump in the month of March? Well, it's the spring market. We know that. However, the spring market didn't actually show itself in the number of sales. So we'll come to that shortly. But let's stick with this thing, because when we look at Timberley, Prospect, St. Margaret's Bay, Glenhaven area, when we look at Sackville and we look at East Hants, Colchester, West, which is Enfield, Elmsdale and Lance area, those are our top 3 markets this month. So spoiler surprise, but we'll do those in more detail. But when you look at all 3 of those, they were the top selling markets, but they also had big increases in average price from last month. So if those are the markets that are driving the majority of the sales, majority, I'd say 30%, something like that, we're in those 3 markets, maybe 40%, then you can see that those averages are up. Now let's throw in Bedford, which had a fairly large jump from last month to this month, new sales. And let's also have a look at a couple of the areas in Dartmouth, being Colby and Dartmouth Montebello, Keystone. They all went up fairly chunky in average price. So when you start looking at some of those and then you throw all of those into the mix, it's not that difficult to see that the average price went up. You look at South End Halifax, average price there of 1.15. Well, it was the same last month. So average for South End Halifax didn't really affect the prices. Fall River, another high priced market area, didn't really change from last month to this month. So that can't be an effect. So really, it's been Sackville, Timberley, Prospect, St. Margaret's Bay, Glenhaven, Upper Tantallon in there as well, and then Enfield, Elmsdale, Lance, top markets have all had a good increase in price from last month. So that's what's driving everything up. Now, there were some pretty good new builds that were sold as well, and that always drags that price up as well. So throw those into the mix, and I think that's what's been going on. Also, let's throw into the mix, why not? We've got a big pot here and we're chucking stuff in. Well, let's go into multiple offers again. They were driving over asking price for sure, and we were part of 4 multiple offers, of which 3 we didn't get and 1 we did. So when you kind of look at that, I think buyers are definitely using their rate holds. We had the month of February when there was no base lending increase in the mortgage rate. So a lot of buyers said, well, fine, if there hasn't been a base rate increase, we need to get into our 90-day rate hold, and we need to get something under agreement, because the next one could be another increase in price for the base rate. So let's get in there and get this done. So like I say, when we look at the average sale price, we are plus 8% on last month. We are down 9.4% on this time last year. Let's look at the average sale to list price. We're at 99.9%. So 579.8 was the sell price, 580.3 was the list price. So we're more or less there or thereabouts. Now, yes, some markets up, some markets down, but on average, we're good and we're holding at basically list price to sale price being the same. Last month was kind of the same, 99.4, not that much. Last year, well, that was 120% sale to list price. Sale price there was $639.8 thousand. So take basically 20% off that, more or less, and that's what we were listing for. So you can see that we are like down 20% really on what happened last year in terms of price. So let's have a look at the number of houses sold. 272 houses sold March this year. Last month, 233, so like up 17%, but nothing huge to write home about. However, last year, 446 homes sold in March. So we're down number of houses sold 39%. So I went digging, because I like to do this every now and again. And I was like, well, let's go back to we know that last year, 22, 21, a little bit of 20 were all COVID years and were fairly big selling months. So I'm like, well, okay, then let's throw in 2019 and 2018. And it seems on average for most of those years, we sell roughly 400 houses a month in March because it's that spring market. People are starting to see the snow disappear. They're starting to think about summer. They're starting to think, well, if we want to move and be in the new house for summer, we kind of need to get it done in March. So roughly 400 homes sell in March because that's our spring. Not so this time, 272, which is quite a chunk of homes lower than we would normally sell in March. So when you look at the number of homes that are now active homes were 559 homes. Last month, that was 485. So we're up 15% on that. Last year, that was 248. So we're up 125% on that. That clearly equates into the amount of inventory because if we've got more houses active for sale this time compared to last time, if we've sold less this time compared to last time, guess what's going to happen? Well, inventory's gone up. So we're at 2.1 months. Last month we were at 2.1 months, so not a big change. Last year we're at 0.6, so up 250% on this time last year for the number of months that are inventory, number of months of inventory that are actually for sale. So those are kind of some of the key stats. Now, days on market. 28 days on market, 31 last month, so down a little bit better on last month. But of course, going back to March last year, 11 days on market there. So, up 17 days on last year. So you can see that a combination has basically taken effect is we've had more inventory for sale. We've actually been selling less. And those that are selling are actually staying on the market longer. So here's the other little thing we want to look at. When we look at the amount of houses that are actually for sale right now, the 559 homes, of all of those, if we take an average of everything that's for sale, days on market in there, it's 75 days on market. So then you want to say, well, okay, but let's strip out all the brand new construction, all the builders, let's strip all of those guys out because we know that they can put something on the market 200 days ago. Because it's going to take them roughly that long, maybe even longer, 250 days, to actually construct the house for sale, move-in ready. So let's strip out all the builders because they can definitely skew the numbers. And we go down to 62 days on market, which is more or less double the average of those that did sell. So we go back to sellers. This is what it means for you. If your house has been on the market for longer than 14 days, 2 weeks, we know that you will get roughly the most viewings, the potential for the most amount of offers, and therefore hopefully an accepted offer in the first 2 weeks of you being for sale. A lot of those houses have been probably conditional pretty much quicker than that because we're still playing that little bit of a let's leave it open for all offers to be in by Sunday or 4 or 5 days later, or we want 24, 48 hours, something like that to make sure that everybody gets the maximum amount of chance to look at the property and write an offer rather than house comes up for sale today, first person walks in the door, says, I'll give you asking price, done, finished. So when you look at that strategy, that means for sellers, if you haven't had your viewings, because 3 things will happen. You're either going to get no viewings, which means no offers. You're either going to get viewings or no offers. Guess what that means? Or you get viewings and offers. Only number 3 is the one that you want. You want viewings and you want an offer. So if that doesn't happen in the first 14 days, you need to reassess one of the three things: price, condition, location. Said this before, but you can't change the location, so guess what you're gonna have to change: price or condition. Your choice. But if you're looking to get your property sold and it's not happening in the first 14 days, I would highly and strongly suggest that you need to look at the price versus the condition. Look at all the competition, look at everybody that's sold around you, look at the new ones that are coming up for sale, and if they've gone conditional, well, that means that they had the viewings and they had offers. So from a selling point of view, got to have a strategy. Got to make sure you're working that strategy. Got to make sure it's going to work for you. And if you need any questions or any advice on that, consult your realtor. If you haven't got your realtor, consult this one instead. Buyers, what does it mean for you, given that it's like getting into that multiple offer situation? It basically means we're not looking for a 7 or an 8 out of 10 house anymore. We're kind of going down to a 6, maybe a 6.5, possibly even a 7 out of 10. Just understand that all the other buyers that are out there are also looking for 6 to 7 out of 10 houses as well. Yes, there are some 8, 9 and 10s. 8, 9 and 10s are probably going to get you multiple offers. So if you don't want to be doing the multiple offers, I would strongly suggest you start kind of changing the expectation of the properties that you're going to be looking for. Maybe it's time to find something that you can fix up and do some renovations, put some sweat equity in. Think about purchase plus improvement mortgages and do what you can that way. So that's the advice for buyers. Now, let's have a quick look at the sales to new listing ratio, because that's always a really good indicator of exactly what's going on in the market as well. So sale to new listing ratio this month was 63%. That means we put a lot more listings on than we had sales in the month. Flip that to last month, that was 91%. So we were a lot closer with the amount of sales to the new listings that we put on. Flip that to last year and we were at 124%, which means we sold a lot more than we actually put up for sale. So we only put 433 houses on the market in the month of March, but we sold 272 of them. That's what gives us our 63%. So if it's lower than 100, we are putting more houses on the market than we're selling. If it's more than 100, we're selling more houses than we're putting on the market for sale in terms of new listings. So once it's less than 100, you can pretty much see inventory going up. If it's over 100, inventory levels are going to come down. Simple math, that's the way that gets played. So this also, like I said, the biggest thing here to take away is the big price jump, which, I mean, prices are going to change just depending on the houses that get listed and the ones that actually get sold and how much people are willing to pay for them. But if you look at that kind of number one big thing, it's the big price jump that we weren't really expecting. I was expecting us to just hover around that 530, 540 number and just kind of stay there for most of the year. Not so, because we've jumped. The second thing though that I really think is important to look at is the low volume of sales that took place in March compared to going all the way back to 2018. So going back basically 5 years. And you know, that's an interesting one. That tells you definitely that, you know, from a buying point of view, there's not a lot of homes that are actually being bought because we're increasing inventory. So is it a factor of that the buyers just can't find what they want? Is it a factor that the people who are selling are being maybe a little bit, expectation is a bit too high maybe on the selling price? Certainly some ones here in Fall River that I'm like, I don't understand. You've been on the market now for like 3-4 months and you haven't changed the price? It's a little bit mind-blowing sometimes, but I'm not their realtor. So that's one of those things that realtor and that seller are going to have to figure out, because you don't put your house up for sale unless you want to move. At least I don't think you do. So that's one of the big things. Now let's get into some actual numbers for the first, second and third in terms of the markets around here. So you already know that the 1, 2 and 3 markets, what they are, but let's get into some detail. So number 1 is Timberley, Prospects, Margaret's Bay, Upper Tantallon, Glenhaven area. So they had 30 homes sold. They had an average price point of $613,000, which was more or less like the same as what the asking price was. Interesting though, 50 days on market. There was definitely a couple of new builds in there though. I did look at that. That will clearly take the average days on market up for sure. They sold 30, they had 66 active for sale, which gives them a 2.2 months in terms of average. So if you look at just at that market, they're the average amount of inventory for sure. Number 2, we are off up towards the airport and we're heading to Enfield, Elmsdale, Lance. and their average sale price up there was $458 and a little bit $1,000. 23 homes sold, 66 average, 2.9 months of inventory, 56 days on market there. So not really new builds causing that number, it's just taking longer up there before people actually buy the houses. And then when we look at number 3, we are at our favorite new starter market. It's not really a starter market anymore, looking at average price point, which is Sackville. We're at $476,000. 102% sale to list price there, so still going strong there for Sackville in terms of getting over asking price, that's for sure. 20 homes sold, only 21 available, 1.1 months of inventory, 12 days on market. So Sackville is still probably, even though it's like, you know, kind of third in terms of volume of sales, I'll still say it's one of the hottest markets. And, you know, average price point there, $476, that's way up from like what it used to be in the $250 to $270 range. So Sackville is still crazy hot. So I think we've covered all the numbers on there. If you have any questions, if you want to go into a little bit of specific detail on your particular area, then by all means, hit me up with a message in the comments below and we will do one personally for you. Like, it's not that big of a deal. Like if you want to give us a call, we can easily jump on Zoom and get that figured out. So those are the contact details. If you need to get hold of me, well, you know where I am.